Hello and welcome to Bunnex Investment Group. Today we are going to talk about the key factors that you need to consider when analyzing the market. Taking these into consideration will remove pressure in your analysis. Before we jump into the whole video, be sure to check out our free Signals Telegram channel where we share tips and advice. The link is right in the description below. If you are new to this channel, hit that subscribe button and smash the notification bell icon. What is Forex analysis? Forex analysis is used by retail Forex traders to determine buy or sell decisions on any currency pair. It can be technical in nature, using resources such as charting tools. It can also be fundamental in nature, that is using economic indicators and all news-based events. Here are the steps that you need to follow as a professional trader. To trade Forex professionally, you need to have a routine of doing things. And whenever you sit in front of your computer for analysis, there should be a sequential route that you should follow. In this video, we will talk about the sequence of activities that you have to follow. And they are right below from this information. The first thing that you need to do is to check the economic calendar. The economic calendar refers to the schedules, dates of significant releases, or events that may affect movement of an individual currency price. This will give you a map of which currency pairs are going to be volatile, as well as the time they are going to be volatile. As a professional trader, high volatility may give you a negative impact in your trading. So try to stick with manageable volatility and avoid high impact news. The next thing that you should incorporate in your analysis is portfolio creation. After checking the economic calendar, creating a streamlined portfolio will be your next step. So checking out pairs with high impact news will give you a list of pairs that you can now go in deeper with your analysis. You should note that, as with most trading, the more volatile a pair, the greater the likelihood of a big profit or a big loss. Write the current pairs in your trading diary that you'll be looking at. Third on our list is higher time frame bias. The first thing is to check out the 4-hour chart or the daily time frame for higher time frame levels. This will give you the overall direction of the trend as well as the extent of the flow of the trend. Higher time frame analysis will also remove noise in your analysis. You will also need to mark up levels in these time frames. You will get the long-term directional bias in doing so. Fourth on our list is smaller time frame bias. From the higher time frame, you need to know what you are looking for on the smaller time frame. The smaller time frame will be the one that will give you the entry signals. However, levels will also need to be marked on the smaller time frame to get the bias. If you cannot mark directional levels, I refer you to a video about that on this channel. The link is also in the description below. Last but not least is the trading checklist. This is basically the most important thing in your analysis. Your Forex trading checklist should contain all the elements you will be looking at before entering a trade and what actions you will take once the trade is open. Talk to any successful Forex trader and you will see that a very precise step-by-step process is followed by the trader on a daily basis. Your goal with your checklist is to eliminate confusion in what you are doing. That means you must be precise in your different steps. Usually, a trading checklist counts 3 parts. The first one being the signal. What are you exactly looking and need to see before considering entering a trade? Then the entry, how do you enter the trade? What is the risk per trade. The exit, what rules you have to exit your trade. That is stop loss, take profit, etc., and where you put those orders. This should be in your trading checklist. So as I always say, the above factors that are important in your analysis will never work if you do not have discipline. Because without discipline, you will never be consistent. And without consistency, you will never achieve the goal. So stick to the rules we have discussed and do not give yourself pressure. In conclusion, follow your plan without deviation or hesitation to act. On that note, thank you for watching. Like and subscribe and check out our free Signals Telegram channel. This is the link.